Hey everyone, welcome back to Corporate Decoder, the place where we break down the financial jungle for you. And today we are diving into Flowco Holdings Inc., latest annual report aka. The big 10K, it is packed with numbers, strategies, and yes, a few risks. But stick around because we're going to decode what it all means for the company and its future. Plus, we have a fantastic Discord community waiting for you, linked below. Alright, so Flowco Holdings Inc. has just dropped its annual report for the year ending the 31st of December 2025. It's a pretty thick document, so let's cut through the noise and get to the juicy parts. Think of this as the company giving you the highlight reel of its year and its game plan. First off, let's talk about money coming in. In 2025, Flowco Holdings brought in a hefty $759.7 million in total revenue. That is a significant jump up from $535.3 million in 2024 and a massive leap from $243.3 million in 2023. What does this mean? It means the company is growing and growing fast at 42% growth from 2024 to 2025. That is a really strong performance, especially in today's market. They are renting out equipment and selling products, and both sides of the business are seeing big increases. Their rental revenue alone jumped 51% to $418 million. That is a lot of compressors and vapor recovery units helping their customers pump out more oil and gas and capture more emissions and sales. They shot up 32% to $341.8 million. This growth is largely thanks to their acquisitions last year expanding their reach and their offerings. It seems their strategy of focusing on production optimization and emissions solutions is really paying off. Now, with more rentals comes more cost of rentals naturally. It went up 53% to $114.3 million in 2025 compared to 2024. This is pretty in line with the revenue growth from rentals, also helped by those acquisitions they made. But hold on to your hats because selling general and administrative expenses specifically jumped a whopping 90% to $118.6 million in 2025. While revenue grew 42%, those overhead costs, particularly those tied to becoming a public company and integrating acquisitions, went up much faster. This is something to watch. They specifically mention increased personnel, marketing, and sales expenses due to the 2024 business combination. It is normal to see a bump after big deals and going public, but such a large percentage increase deserves attention. Let's talk about debt. Their interest expense decreased by 41% to $18.9 million in 2025. This is fantastic news. It is largely because they paid down a significant chunk of debt using money from their IPO. They paid off $440 million on January 2025. That is a huge win for their financial health, freeing up cash and reducing risk. It shows pretty smart financial management after going public. Looking at the bottom line before taxes, Flowco Holdings earned $130.8 million in 2025. That is a solid 61% increase from $81.4 million in 2024, demonstrating strong operational performance beyond just revenue growth. Now let's peek at their balance sheet as of the 31st of December 2025. Total assets stand at a hefty $1.65 billion. On the other side of the ledger, total liabilities are about $288.4 million. And then there is this thing called redeemable non-controlling interest, which is a significant $1.13 billion. This reflects the ownership stake of others in their operations, which is a common structure after these big combinations and IPOs. Stockholders' equity is about $228.6 million, which is healthy considering all those other liabilities and interests. The company's debt is down significantly to $167.8 million from $635.9 million a year earlier, which is outstanding progress after the IPO. Speaking of cash, Flowco Holdings ended 2025 with $4.5 million in cash. For a company of this size, that might seem a little low, but they also have $557.2 million in available borrowing capacity under their credit agreement. So they are not exactly strapped for cash. Their ability to generate cash from operations is strong, and they are actively managing their debt. They even made an acquisition in August 2025 of certain gas lift and vapor recovery systems for $71 million. This shows they are not just resting on their laurels, but actively investing in growth. Of course, no company is without its risks. Flowco operates in the oil and gas industry, so naturally commodity price fluctuations are a big one. If oil and gas prices drop, so does customer spending, and that directly impacts Flowco. They also mention investor sentiment towards climate change and environmental, social, and governance matters could affect their access to capital and their stock price. This is becoming a bigger deal for all energy-related companies. Cybersecurity is also a significant concern, as is their reliance on a few key customers and managing the costs of being a public company. They've also admitted their internal controls over financial reporting were not effective due to material weaknesses. This means potential for errors in their financial statements. While they are working to fix these issues, it is something investors should be very aware of. Flowco's game plan seems clear. They want to keep growing by focusing on production optimization, artificial lift, and emissions management. They plan to do this through continuing to innovate on their products and services and by staying close to their customers' needs. They are also focused on disciplined growth through acquisitions and returning capital to shareholders through dividends and share buybacks. They've paid out dividends since May 2025, which is a good sign for returning value to investors. They also did repurchases of their own stock, demonstrating a confidence in their valuation. So what is our take on Flowco Holdings? On one hand, their revenue growth is stellar and their debt reduction after the IPO is impressive. They are clearly growing and expanding through strategic acquisitions. Their focus on emissions management also positions them well for the future. However, those rising administrative costs and the admitted weaknesses in internal controls are definite areas of concern. While the growth is exciting and the acquisitions seem strategic, the company needs to keep a very close eye on controlling its overhead and strengthening its financial reporting processes. The oil and gas industry is always a bit of a roller coaster, and Flowco's dependence on commodity prices adds that layer of risk, but their business model focused on production, rather than just drilling, might offer some stability. In conclusion, Flowco Holdings Inc. is a growing company making smart moves, especially with debt reduction and acquisitions. They have a strong market position and a clear strategy for the future. The key challenges will be managing their operational costs and ensuring robust financial controls. It's a company with significant potential but also demands careful monitoring by investors. Alright, that is our deep dive into Flowco's latest report. What do you think about their growth strategy and those internal control admission? Let me know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more in-depth corporate breakdowns. And don't forget to join our growing community on Discord, linked in the description. Thanks for watching and see you next time on Corporate Decoder.